Good morning and welcome to the Dollars and Cents Radio Show with Troy and Lauri. Troy is your host and I'm the lucky girl who gets to be married to him. And I am Lauri and we're here with you for the next hour and a half. The Dollars and Cents Radio Show on Cruisin' 1430. Happy to have you here with us this weekend. The weekend before the Super Bowl. And I'm hoping that we're going to have some music, some football music.
Kind of get you in the mood, the spirits.
I'm so excited. Troy said it's going to be 2 weeks of happy in Denver. So,
yeah. Hey, and it's good economically. It's good for the city. It's good for the state.
How do you figure? Like, people are buying shirts?
Yeah. People are buying hats and shirts.
Merchandise.
And
party materials?
Absolutely.
Balloons?
People are, how many folks listening right now are hosting a Broncos party, a Super Bowl party, or going to one?
Oh, yeah.
And they're going to be,
We have family coming into town.
There you go.
So they'll be spending money here.
Absolutely.
All right. So anyways, go Broncos. So we are with you for the next hour and a half. We just heard that there is, I just got to make a mention, after the show at 10 o'clock, right? 10 o'clock. There's a show after this. Hypnotist is on, so that's exciting. I'll be tuning in for that too. All right, so Troy, I know we got a lot of stuff going on this week. Why don't you get us started?
We do, and we do today. Folks, good morning, and thanks once again for joining Lauri and I for this week's Dollars and Cents Radio Show. As always, we have a great show. We have a busy show for you today. A lot going on. We have a special guest later in the program in the last half of the second hour, so we'll keep you in suspense there. We're going to touch again on Social Security. We talked about it last week. I'm going to just do a recap on what's changed with the Bipartisan Budget Act of 2015 that was signed into law in November, and that will have a lasting impact on many of you listening that have yet to claim your Social Security benefits. That's coming up in just a couple of moments, so everything you need to know how to maximize your benefits within the new Social Security laws and rule changes. Also today on the program, 3 steps to investment success. Just 3 simple steps, but 3 steps that you're not going to want to move forward without. We're going to talk about the importance of knowing the color of your money. What is the color of your money? We all think it's green, but it's important to be able to properly categorize your money. Red money, green money, there's some yellow money over there, and why each is important and why it's important to have the proper healthy balance of each color within your portfolio. Finally, is your broker making you broker? Are you getting
Probably now, yes.
Are you getting your money's worth from your financial advisor, and what you need to expect going forward from your advisor? Because at the end of the day, I'm just going to put this out there, folks, your expectations are too low when it comes to your expectations from your advisor. I'm going to share some stories with you here. I've recently met with some individuals, Lauri, that have, for example, worked with a financial person. I don't know if this person, what category in the industry they fall into, but a financial person, let's say, for 20 years. After 20 years, they don't know what they're paying this person. They don't know what their fee structure is. They can't explain what it is they have. Listen, 20 years, folks, is a long time when it comes to a dress rehearsal. The dress rehearsal ended a long time ago. And so, but they feel an attachment. They feel, boy, I feel guilty if we left Tom, or if we left Mary, and we've been with them for 20 years, and well, do you like what they do? I don't know, I guess. So we're going to talk about that. We're going to empower you with some knowledge and some input on that during the program today. In just a moment, I'm going to go into my weekly market update where we will summarize last week in the markets. Volatility continues. I'm going to summarize the first trading month is now in the books of 2016, what happened and what it means going forward, what you need to do now to prepare for the next 11 months of 2016. Very good stuff coming up in my weekly market update. But first, we have a open phone lines. Kathy is standing by. Momentarily, we're going to get that phone number out there. Here's why you're going to want to get it down. If you are not yet drawing Social Security, but you are on the cusp, you are entering that realm of 62 years of age, and you're kind of wondering, what do I do? How do these new tax laws affect me? What strategies are no longer available to me, or what the strategies that are no longer available to me as of May 1st this year. We are hosting Hamsher Wealth Management and the Dollars and Cents Radio Show. We are hosting our third and final of the first quarter Social Security Maximization and Income Planning Workshop. It's free. It's at the Summit Steakhouse this Tuesday is it 5 o'clock?
5 o'clock.
Okay. 5 o'clock this Tuesday. There are a few seats left. It is by reservation only, which means you have to call and get on that list. It doesn't cost you anything. Dinner will be provided by our longtime sponsor of the Dollar and Cents Radio Show, our friends over there at the Summit Steakhouse. And it's going to be about an hour. We're going to talk everything Social Security and how Social Security really does create the foundation of a solid retirement income plan. I'm going to talk about that here in a little bit more depth after the market recap. But if you want to get that phone number out there, and anything, Lauri, important that I'm forgetting about that workshop, throw it out there.
Well, it might be a snowstorm, so might not be able to get
We do have
that is always
the
a potential.
granddaddy moving in here.
Yeah, I think it's funny. I got to say that Troy told me this week. He's like, you don't have to prepare anything because I got this week covered, and he's not lying. And let me just tell you this, folks. So, as he's so true about that, because in our notes, the only time it says for me to do anything was explain the summit workshop. Well, he just did that too. So I guess I am going to be playing Vanna today, and all I got is that phone number, so we could just record this.
Vanna White has a very important.
No, Vanna White has got like the best job in the world with taking home money for turning letters. Okay, so that number is 303-539-5420 to get on that list. Again, that's 303-539-5420. Hank, if you could just like hit record on that, and then every time he needs to meet, I could just leave for the rest of the day, and you can just keep.
Actually, Lauri is leaving. I'm speaking at a Social Security maximization and income planning brunch this morning over at the Summit Steakhouse. So literally, Lauri is leaving us. She's jettisoned out of here halfway through our second hour and leaving me in limbo here. So.
I think you'll make it through, and we've got. You said it was a surprise, but I think we should just say it's Logan's going. It's going to be Logan, our oldest son's debut.
He's been working behind the scenes and interning here at the Dollars and Cents Show and Hamsher Wealth Management. He's learning a lot, and it's.
And so he's been behind the camera. And next week, for you listeners, if you call in, we usually have Kathy answering the phones. She's going to be taking a little hiatus, so Logan will be answering the phones. He just looked at me and hot. So basically, he's made himself indispensable to us. So, all right, on that note, if you want to come to the Dollars and Cents workshop on Tuesday, this coming Tuesday, February 2nd, at the Summit Steakhouse, again, you have to RSVP. Kathy is standing by. 303-539-5420. Again, that's 303-539-5420. Again, it's for people who, if you have not, you or your spouse has not yet started Social Security, and you're running up on that sometime in the next year or two or three, might want to know or get your hands on that information. So 303-539-5420. Troy, why don't you start on that little market update?
Will do. Again, before the top of the hour, I will kind of cover some of the changes in the new Social Security bipartisan budget Act of 2015 and who it affects and who it doesn't affect. Namely, if you're already taking Social Security benefits, don't worry about it. It does not affect you. It has zero effect on you if you're already taking benefits. We'll talk about that here on the other side of this week's market update. Market volatility continues, with the averages posting their worst January in 7 years. Stocks averaged more than a 1% swing each trading day last week. Let me repeat that. Stocks averaged more than a 1% swing, one way or the other, each trading day last week. The takeaway on that, volatility is here to stay for a bit, folks. And I'm going to talk about the drivers of that volatility and what to expect and the hows and whys. The NASDAQ posted its worst month since 2010. The S&P did finish the week higher. The main drivers on the S&P, earnings reports and the persistent focus on oil prices, were up on the week. Get this, on rumors of potential overseas production cuts. So Oil was up for the week on rumors of potential overseas production cuts. I'm not certain that's going to happen. Right now we are in a, I was explaining this to an individual the other day. We were talking about the energy sector and oil. And, oil always has been and always will be a cyclical commodity. And it's, it's like a big teeter-totter. And it will always continue to get out of balance with supply and demand. I mean, that's just the economics of oil. And, that's how we ended up with oil going from $114 a barrel to $27 a barrel, is the supply and demand. You've got slowing growth in China, which means a decrease in demand. And currently, global production, we are producing an additional 1 million barrels of oil per day than we are consuming on this planet. And so you add that to the mix. You also add to the mix in the United States, our production levels are at levels that we haven't seen since the 1970s. Why? This little technology breakthrough called fracking allows us to access levels of oil that, again, we haven't seen since the 70s. And so, at the end of the day, I think that things are going to balance out a little bit. I think that, the fact that we've went from 1,600 drilling rigs to 500 drilling rigs, I think production will fall in line with demand, and I think that the price of oil eventually here, as we get further into 2016, is going to stabilize and start to move in the other direction a little bit.
You know what I think is the greedy business in this? I mean, I think it's fantastic what the gas prices are at the pump, but who's greedy is the airlines. They aren't reducing their prices at all.
Yeah, that's a good point. We go to the gas pump, and it's good for us at the gas pump. It keeps more dollars in our pockets, and you go, Logan, you said the other day, he's like, wow, I went to fill up my car and it was like $19. And you drive a gas guzzler SUV, and so it is nice at the pump, but it's not translating into lower airline travel. And that's sort of an industry-wide trend that we're seeing, and so.
I'm waiting for those prices to fall.
But I can guarantee you, though, when the price of oil gets back up to $50, $60 dollars plus a barrel, we will see higher ticket prices.
That's exciting.
At the airlines. So, only about a third of companies have reported earnings so far, which started last week. While the majority of results that have come in ahead of expectations, that's a good thing. Mixed announcements from several blue chip companies produced varied performance among different large cap stocks. So what's the takeaway in all that? Well, first of all, we've got 2/3 of companies yet to report earnings. So we don't know what we're going to see there. We have an idea, but we're not 100%. We don't have that crystal ball, but we've got 2/3 of the companies that are going to be coming out with their earnings reports. Let this be a healthy reminder to not rely too heavily on any single stock, as earnings reports can and usually do cause and produce volatility. Volatility is real, it's here. Again, last week, each trading day, the stocks averaged more than a 1% swing each and every day, and that starts to make investors nervous. Folks that are, some of you out there may fall into the category that I really don't pay attention to my values on a regular basis, and then there are those of you that you log on a daily or maybe 3-4 times a week, and you're checking the value, and
that'll shorten your lifespan.
Absolutely. So the key to healthy long-term success is proper diversification and having a plan in place. I've talked probably more about the importance of having a plan this year here on the show than any other single subject. The importance of having a plan I cannot underscore enough. And the reason why is because, folks, there are a lot of financial headwinds pressing against you right now. The strengthening dollar, that is a headwind when it comes to your portfolio. Market volatility, you're in financial waters that are uncharted. There isn't a historical map that we can look back to say, well, here's what we can sort of expect. These are new financial waters that you are entering into. So without a strong plan in place, those financial headwinds are not your friend. with the right plan in place, those financial headwinds, and I'm going to talk just about what I specifically mean when I say financial headwinds, can become tailwinds in the future. But it's very important. As I've said before, if you fail to plan, you plan to fail. And I can't really put it any simpler than that. If you fail to plan, you plan to fail. The difference between, for example, being 10 years away from retirement and being 36 months away is huge. It's night and day. Folks, those of you listening that are within 36 months or less of retirement, let me just say this, the rubber has met the road. You are now, it's kind of like the old hourglass, you know, you tip it upside down and the sand starts to come through the hourglass. And when you first turn it over and all the sand's on top, you really don't see that much of a change, do you? It seems like it's going slow. But when you get down towards the bottom and most of the sand is in the bottom, doesn't it seem like that last section, that last third just really starts to go quicker?
That was a smart analogy.
Absolutely. Well, thank you. I appreciate
You're welcome.
that. Folks, you don't hear that very often on here.
Wow.
But the bottom line is this. It's the same way as you approach retirement. Those sands are starting to careen through that hourglass much quicker, and you don't get that time back. And so it's time to put a plan in place. We've got a book coming out, Lauri, here in probably sometime in the month of March, titled Whose Retirement Is It Anyway? And we talk about the importance of having that retirement plan. And one of the things that we say in the book is you're not going to accidentally stumble into a successful retirement. Folks are living longer. That's a good thing. If you have a strong financial plan in place that's going to get you 10, 15, 20, 25, 30 years into retirement. So those of you that are 36 months out, I'm specifically talking to you, or less, right now. The important factors for you: properly managing risk. Risk is something that must be managed properly. If you don't manage it, it will manage you. And it's not a fun way to live. Balancing that risk. Red money versus green money. Red is risk-based. We call it hope-so money. Money that we hope is there, should we need it down the road. And green is non-risk-based money, or no-so money. Money that we know is going to be there down the road. And so finding the right balance of red and green money in your portfolio. Lastly, taking advantage of opportunities when they exist. For example, oil, we've talked about a new portfolio that we're introducing that's tied to the energy sector and participating in the comeback of the price of oil once that big ship turns around. Those are opportunities, but properly taking advantage of these opportunities when they exist is going to be important for you folks that, again, the rubber's met the road. You're within 36 months of retirement or potential retirement. Don't let the market dictate what your retirement will look like. That's my whole point here. Don't let the stock market, don't let what's happening in China, don't let what's happening with the strengthening dollar and all of these external factors dictate what your retirement will look like. You know, I'm sort of old school. I was born and raised in small town Nebraska, and so I tend to oversimplify things.
No, you don't.
I do, but I'm a visual person.
That's true.
Point is, I'm a visual person. And when it comes to talking about financial plans and you know, different financial strategies and power tools that are out there, it can just put you to sleep and drive you insane, because these are not sexy subjects. And so what I like to do is I like to create that visual that allows you to plug in to really where you're at and where you're going, and if you're on the right track. So I'd like you folks right now listening to participate in a quick exercise with me. And you'll like this. When I was putting this stuff together, this just kind of popped in my mind. Do you guys all remember the Viewmaster? Do you know what that is, Hank? The Viewmaster?
Hank, you're too...
You don't know what the Viewmaster is?
Yes, you do. You just don't know that it was called a Viewmaster because Logan said it to me and I started doing the motion.
So our oldest child, I asked him this week, I said, do you know what a Viewmaster is? No. What is it? I said, well, back when I was a kid, it was technology. It was cool. So it was one of these plastic, and I always remember them being red. Maybe they weren't all red.
Yeah, I think they were all red.
But the Viewmaster was this big plastic contraption, and it had a lever on the side. You hold it up to your eyes, and you would pull the lever down, and it had this little sort of a cardboard-like disc that you put in there, and every time you pull the lever down, it moves it over to the next frame, the next frame, the next frame, the next frame. And so it was kind of cool. I mean, for us, back in the day, that was sort of our...
like movies.
That was our... Yeah, it was technology. You know, that was cool if you had one of those. And, you know, as kids, we had these little discs all over the place. Think of your retirement. Pull out that Viewmaster. Just put this in your mind's eye here. The Retirement Viewmaster. You put it up to your eyes. You've got that little disc in there, and it's got all these different pictures in there. What is it that you see? When you look through there and you're like, all right, this disc contains pictures of what my retirement is going to look like. What do you see? What do you see? I mean, just stop for just a second. What do you see in your Retirement Viewmaster? Do you see travel? Vacations, beaches, maybe visiting your kids and grandkids that live in another state. Maybe click that big lever over there, it kind of moves over another frame. What do you see? Maybe that vacation home. Click it again. Do you see that boat that you've been dreaming about? Get out there on the waters and fish. Maybe starting that new business. How many of our clients, Lori, once they retire from their 30-year career, now they start doing what they love, their passion, and they start that business. What do you see? Do you see, hopefully not, just a big question mark? You say, well, I'm not really sure what I see in my Retirement Viewmaster. Listen, one thing you can be 100% certain about, your financial plan had better be built and managed in a way that will make that retirement that you're seeing in your Retirement Viewmaster a reality. Your financial plan, that's a noun. Your plan, once it's created, had better be built and managed in a way that will make your retirement that you're envisioning a reality. Because it's not going to happen on accident. Troy, that sounds great, and I'd love to do that. What's step one? Well, step one is hire the right financial professional. Put them in charge. Something as important as your retirement income, the quality of life in retirement. Don't take that lightly. Put the right professional in charge, and then hold them accountable. At the end of the day, it's your money. It's your retirement. You know, in our book, this reminds me, Lori, our book opens, the book, again, it'll be coming out in March. Whose retirement is it anyway? There's a story about a doctor that retired with a portfolio of $3 million. He was a brilliant doctor. By the time he caught, and then now he retired prior to 2008 hit, he was intimidated by his stockbroker. He would call and say, boy, you know, I'm really scared. I'm looking at the value of my portfolio. And he would get responses, listen, write it out, the market goes up, the market goes down, you just kind of got to write this thing out, this is a long-term plan. And he was 70 years old at the time. By the time he came in and talked to us, he had $500,000 left. Now listen, $500,000, I'm not saying, I don't say this to say $500,000 is a small amount of money, it's not. I'm saying in perspective, $3 million to $500,000. They had to sell their dream home, they had to make a lot of life changes. He was intimidated. This is your money. Never be intimidated about making the right decisions when it comes to your finances, when it comes to your 401ks, your plan going forward. We're going to talk about just some of the strategies to do that, to make that happen. And you know, one of the strategies, it starts with, I'm going to just dumb this thing down and get back to the basics, is it starts with, for example, maximizing Social Security. If your financial planner, your financial advisor is not bringing this subject up to you, folks, to you and your spouse, and saying, listen, John, I know that your wife just turned 62 and you're 63, you're not taking Social Security, you're about to retire. We need to sit down and figure out how to maximize those benefits to save money out of your own nest egg. If they're not bringing up that subject to you, you may not be working with the most qualified professional.
All right. Well, I'm sure you're just letting
I'll
me
take
go
a breath.
do the phone number out there, but I'm gonna feel like John Kasich here, and you know, like he always in the debates, he's like, hey, I'm gonna go back to that question, 4 minutes ago, but I want to add on to something that you were saying, about being emotionally attached to your advisor, and something occurred to me this week. I know, and we have seen it over and over again, especially with women, they become attached to their advisors emotionally because money is so emotional. You don't want to hurt somebody's feelings and such.
Right.
So, and that happens a lot to women. So something happened to me this week, and we have been working some very odd hours, Troy and I have this week, and about on Monday, he said, you know what, honey, we're just going to go out to dinner. I don't want you to have to cook tonight, so we're just going to go out to dinner. Where do you want to go? I said, let's go to Bad Daddy's. We get to Southlands area, and we stop, and he goes, you know what, honey, you look so nice. You're dressed so nice. You just look so good. You just look too good to go to Bad Daddy's. I'm going to take you to Ted's. Aw, you just scored so many points. I was like in love with my husband. It was just fantastic. I just loved him. So then 2 nights later, we're coming home from work again late, and Troy says, you know, it's late again. I don't want you to have to cook dinner. You want to go out to dinner again? I said, okay, yep, we'll go out to dinner, but you pick the place. And you look at me and said, let's go to Bad Daddy's. and it became...
So
not
all of a
about
sudden,
food
all those
anymore.
points were out the window.
No, it was like, well, what do I look like today? Well, how bad do I look today? It just became more emotional. So now it's not about food. I'll know that if you want to go to Ted's, I look nice. And if you want to go to Bad Dad's, then,
crap.
yeah. So it's just, but that's, I think, how women, it's...
Good knowing you over there, Bad Dads.
No, I'm just saying that women do become emotional. It's not necessarily about the practical, about food. It becomes about the emotional. So it's hard, and I get it. We get it. We hear it a lot, but especially this day and age, and with this global economy that we're in, maybe take a step back if you can, and think about what is important. And what's important is your money. So, all right, on that little jaunt, our number to call 303-539-5420. Again, that's 303-539-5420. If you want more information about what we're talking about today, anything about what we're talking about, as well as if you would like to get on our reservation list or RSVP list for the Summit Steakhouse for Tuesday, February 2nd at 5 o'clock. It's dinner. It's a great presentation by Troy. I will be there. Logan will be there. And well, so long as it's not a big snowstorm.
Yeah, and if you're just joining the program, we've got our last Social Security maximization and income planning program of the quarter here in the first quarter of 2016, this coming Tuesday, February 2nd at 5 o'clock. It doesn't cost you anything. It's complimentary. It's free. But you do have to have a reservation because seating is limited. And you're going to enjoy a phenomenal dinner at the Summit Steakhouse. You're going to walk away with a lot of good information, especially important for those of you. If you're already drawing Social Security, you and your spouse, this is not for you. But if you are not yet drawing Social Security, or maybe one spouse is, one is not, this is something that you're going to want to attend if we have room, because they just passed in November of 2015 the Bipartisan Budget Act was signed into law that drastically changed Social Security, your claiming strategies and options that are available. We cover all those at the workshop.
All right, so again, give Kathy a call now. She is standing
Phone
by.
lines are open.
303-539-5420. Again, that's 303-539-5420. And stay tuned. Hang with us after the commercial break. We are going to be talking about Social Security. A little bit of Social Security. So.
Oh, shit.
There's a sink that...
Welcome back. You are listening to the Dollars and Cents Radio Show. Thanks for hanging in with us. Hope you're having a fantastic day before the snowfall. Hopefully, Denver, you are out and about at the grocery store or heading to it. Maybe buckling down because I think it's going to be icky. Well, we know our kids have already decided there's going to be a school day or a non-school day. Yes, snow day tomorrow. So, anyways, we'll see. It's probably going to be
Which is fine with me. Someone's got to operate those shovels.
That's nice of you.
Yeah.
Which they would anyways. But anyways, all right, so you are listening to the Dollars and Cents Trade Radio Show with Troy and Lauri. Troy said I was way too verbose in the last segment,
I was being sarcastic.
I hope so. All right, so my job is to be Vanna and get that number out there. It's 303-539-5420, 303-539-5420. You can always find out more about us as well online at www.my401kstore.com. All the offerings that we have, and you can see about us. Troy was talking about the book that's coming out hopefully mid-March, but we also, just stay tuned because our app, our Dollars and Cents app, will be out. Mobile app. Well, aren't all apps mobile? Isn't it just implied?
It's a mobile app for your phone.
We are not technologically inclined over here, so I would assume app means it's mobile. But so that we'll be letting you know about. You can hear cruising all the time, 24/7, comes in loud and clear. You can also see us do these shows live, or not live, but on YouTube, which we still don't understand yet. It's all this foreign stuff to us, this technology. But anyways, it'll be a great thing coming out here soon. But if you want more information about what we're talking about today, or to get on that list for the summit workshop on Tuesday, February 2nd, 303-539-5420. So Troy, let's go on. Give us the changes that have been going on recently, or since November with Social Security.
Yeah, well, a lot of you folks may be aware that the Bipartisan Budget Proposal Act, it's a mouthful, Bipartisan Budget Proposal Act of 2015 was passed by Congress and signed by President Obama in November of 2015. And it changed the strategies that had previously been used to file for benefits. And so file and suspend is now different, and it's on its way to extinction, restricted application. However, file and suspend, if you will be 66 years old before April 30th, 2016, you still have the option to utilize this claiming strategy. Restricted application, if you will be 62 on or before December 31st of 2015, you can still plan to use a restricted application and that strategy when you reach full retirement age. So these are important changes. We provide something for everybody that attends the Social Security Maximization Workshop, and for our listeners, something called the Social Security Maximization Report. Folks, at the end of the day, Social Security planning is income planning. You've heard me talk repeatedly about the importance of going into retirement with a solid retirement income plan. You're not going to accidentally stumble into enough retirement income. And at the end of the day, if you put everything that has to do with your retirement into a want column or a need column, which column would sufficient income fall into? The need column. So it's very, very important. And by the way, Social Security, we're not saying that if you properly maximize it, now you have a rosy, beautiful 30-year retirement. No, we're saying is that by maximizing it, for every dollar you can maximize from Social Security, that's one less dollar that you're going to have to pull from your own nest egg to supplement that income gap in retirement. Retirement income planning is arguably the most important plan you'll make and should be making prior to retirement. And it starts with knowing how, by knowing how to maximize your Social Security benefits. And that's what the Social Security Maximization Report is for. I met with somebody yesterday and they said, I went online, I went to the socialsecurityssa.gov, and I tried to get this Social Security report. This is not a report that comes from the Social Security Administration. First of all, they cannot give you advice. They're prohibited from giving you advice. They can answer questions. They can say at age 62, this is how much your benefit's going to be. At age 66, full retirement age, this is how much your benefit's going to be. If you wait till 70, this is how much it's going to be. They cannot give you financial advice, however, and this Social Security Maximization Report is not something that's available online. It's not something that is from the Social Security Administration. This is our proprietary software that we have created, and there's no two reports the same. They are fully customized, and it takes into consideration your dates of birth, your spouse's dates of birth. It highlights important dates such as claiming dates, Medicare, spousal benefits, survivor benefits. It takes into consideration if you are receiving a para payout and how that will reduce your Social Security benefit. It leaves no stone unturned. So again, if you're in that planning process and you are not yet drawing Social Security, give us a call. Kathy's standing by, and she will arrange to get that Social Security Maximization Report from us to you at our cost, not yours. Or if you would like to meet us in person, we'd love to meet you at the Dollars and Cents Social Security Maximization Workshop, which is this Tuesday at 5 o'clock. We have a couple of reservation slots still available. It doesn't cost you anything, but reservations are required. You've got to be on the list. That number is 303-539-5420. 303-543-5420. We talked, Lori, about the importance of maximizing that Social Security benefit. And we know that we also talk about something that's called that retirement cliff. And that's the day that you retire. You walk out of your accumulation years and into your distribution years. And typically the biggest change for most folks the day they retire is their income picture is completely different. For most folks, their expenses are the same the week after they retire as it was the week before they retired, but their income sources, their income picture looks completely different. And it starts with Social Security. Maybe some of you are blessed enough to have a pension to add to that Social Security, but beyond that, what you're lacking is called the income gap. And one of the things that we talk about a lot and we specialize in is how to properly fill that income gap. And that gap is smaller by maximizing properly your Social Security benefits. So again, it's the Social Security Maximization Report. Should you be utilizing file and suspend, restricted application? It pinpoints your optimal filing strategy. Talks about spousal benefits. It even covers how your benefits are taxed, what your annual earnings limits are. There's something called the windfall elimination provision, government pension offset, disability benefits, and more. It really is a comprehensive report.
It is, and you don't have to come to the workshop to get this. You can just give us a
No,
call.
we'd love to meet you.
Sure, especially if you're a listener, because we really love cruising listeners.
We do.
I think cruising listeners are the best, and we've been on a lot of stations, and I can honestly say we love cruising listeners. So if you want to just get the maximization report, you do not have to spend your time. You can just call in and we will get that information to you at 303-539-5420, 303-539-5420. We will need to get some information from you. So we will be asking you for information, but again, if you want to try and get in on our workshop coming this Tuesday, we're more than happy to have you. You just got to give us a call. It is RSVP only, 303-539-5420. However, if you and your spouse are already claiming Social Security, this is not going to benefit you. We're just trying to help the ones who we can help you, but not in the Social Security way.
That's right.
If you
That's right.
take it, so anything that
We can certainly assist with filling the income gap
Sure.
that exists, and at the end of the day, that's what I enjoy doing. That is what our firm is. That's what we excel at. That's where we shine. Is when folks come in and they say, you know what I need and what is coming in is not in balance, not in check. And we're going to talk about just about how we go about making that happen. And if you're just tuning in, you are listening to the Dollars and Cents radio program. We're here live with you as we are every single Sunday from 8:30 to 10 a.m. here on Cruisin' AM 1430. And in the next 45 minutes, we're going to cover the 3 steps to investment success and the importance of knowing the color of your money, as well as answering the question, is your broker making you broker? Are you getting your money's worth from your financial advisor? Because folks, your financial advisor is not a nonprofit organization. Just take my word for that. You may not know what you are paying him or her or them, but they are not working for free. You are paying them. And I am going to talk to you about the importance of understanding what it is you are paying them, and would you feel different about it if they weren't just invisibly subtracting your dollars from your account and transferring it from your account to theirs, but rather if you had to write a check for it for $4,000 every January or for $8,000 every January. Would you expect more if you had to hand over a check? You had to write the check and hand it over to them. So we're going to talk about the importance of finding the right financial planner, broker, and what level of expectation that you should have. Now, before we do that, I've got to share something. Lori, you're always the one that come in with the family matters and all this.
Well, I was hoping
important
to, but I
information.
feel like I haven't gotten to it yet. But
Last night, Lori and I went to a party.
it was so great.
And
Happy birthday, Jerry and Sandy, by the way.
So Jerry and Sandy, this is cool. So Jerry and Sandy are some of our friends. We have this circle of friends. And what's so cool about this circle of friends that we have, we're so blessed, is they range in age from anywhere from their 40s to their 80s.
30s.
30s to their 80s. And we're not at the top end, we're not at the bottom end, I'll just leave it at that. We're kind of right in the middle. But we're just blessed to know them all. So one of the couples, Jerry and Sandy, celebrate their birthdays are right there at the same time. Jerry and we had a combined birthday celebration for them last night. And Jerry was celebrating his 70th birthday, and Sandy was celebrating her 60th birthday. So Lauri, as your mom said, collectively we had a 130th birthday celebration for 130 collective years together. How cool. So what they did is they had a theme. They got talking when they were planning this party. And Jerry, who is just turned 70, his formative years were in the 60s. She just turned 60, her formative years were in the 70s. So they had a theme night party of 60s and 70s. So, you know, dressed like the 60s and 70s, and all of the music and videos that were playing were from the 60s and 70s. It was so cool. Man, I tell you.
It really wasn't, and we didn't get the memo. About half the people didn't get the memo that we were supposed to dress in period clothes, 60s and 70s. And I'm so upset. And
yeah, because Lauri, you got the email like a month ago, and their birthday party was on my schedule for like a month. And an hour before we were supposed to head over to their party, she said, "Oh, look at this."
I didn't say look at that. It was not. I did not see it on the invitation. I was told that we were supposed to be dressing in period.
And I'm like, dressing like what? She goes, like 60s or 70s.
It's not like
Folks, I'm sorry, I don't have that. You know, I don't have that kind of creativity. First of all, thank goodness I still don't dress like, John Travolta back in Saturday Night Fever or anything like that. But at the end of the day, I'm watching all these videos, I'm there, and I'm talking to some of the guys, and I'm like, well, heck, I could have just gotten like a big old humongous fake mustache, because back then, I mean, that was the era of the huge mustache. And the bell-bottom pants and all this stuff. And I was talking to some of them, and we were talking about things like the Viewmaster, the things that the kids don't get now. They have no idea. We talked about the 8-track tapes. We talked about, things and how much things have changed from the 60s and 70s to right now. And one of the guys I was talking to, Chris, I don't know, Chris is in his 70s probably?
I think so.
He whipped out his smartphone. He's like, everything right here. He says, one of the companies I worked for back then, we had these 2 supercomputers, and it took a small building to house this computer, a military computer. And he said, everything is, so much smarter and more advanced, and it's all right here in the cell phone. It was just cool, kind of reflecting back from the 60s and 70s to where we're at now, and how our kids, when I said, hey, do you know what a Viewmaster is? A what?
Well, when you were talking about the Viewmaster, it made me think, when you went to college, did you have to bring a computer with you?
No. In fact, when I graduated from high school, we had a computer in school. It was in the library. Right. And I'd never even used it. I took a typing class.
Yeah, thank God. Those are exciting.
No.
Do they have typing classes anymore? No more typing classes? Do they? Logan's saying they don't have typing classes.
Like a room full of typewriters.
I think I failed that one.
And it's like, when you would test, it would be like, okay, well, we're doing a words per minute test, and so, you type, and they count your mistakes and how many words you average per minute. And
now it just autocorrect, and it just switches it for you, which is a
I did
nice
take a computer course in college, which was like taking a French language class or something. I mean, it was just... I
remember we had to have
foreign.
A computer in our dorm because all of our papers had to be
Well,
done.
you're younger than me.
That's what I was wondering. Did you have to take a computer?
Thanks for pointing that out.
But it wasn't like what we had now.
What I used was a word processor. Do you guys remember that?
That's what I mean. It's a word processor.
It was not a computer.
Well,
a word processor was
like a monitor.
It was like a fancy monitor typewriter.
Right.
That you could make changes of. You didn't need whiteout.
I forgot about that. That's what I was thinking. I didn't have a computer. I had a word processor. But you know what? And just because we have to go to commercial break soon, do you know? And I think this is true. I'm going to look at Logan again. Did you learn cursive in grammar school? You did.
Did they call it that? Cursive. Yeah.
Because I remember we had to learn that in like 3rd or 4th grade. And I'm hearing that they're taking it out, and I think it's Connor said something the other. He's like, I don't know how to write that in cursive or something, and I was like, what do you mean you don't know how to? You're 15. But I'm just wondering about our youngest niece. She'd be in 4th grade now, so I wonder if she has to learn. I think they're trying to take cursive out of. I don't know. I think and we're all so computer based now. It's all done on a computer. There's no such thing as cursive anymore. So.
And smartphones are taking the place of computers. So, anyways,
yeah,
hey, you're listening to the Dollars and Cents Radio Show.
Or Technology 2016.
Yeah, we've been talking about the importance of maximizing Social Security, and we still have a couple of spots left for this Tuesday's Dollars and Cents Social Security Maximization and Income Planning Workshop and Dinner at the Summit Steakhouse. It is free, but reservations are required. Phone lines are open now. Kathy is standing by, 303-539-5420. Stay tuned. On the other side of the break, 3 steps to investment success you're not going to want to miss. Stay tuned. We'll be right back.
Hey, thanks for sticking with us this morning. What song is that?
This one, Rolling Stones.
I think Hank's on a Rolling Stones kick. I think everything
Yep.
has been Rolling Stones
This
this
is
morning.
Rolling Stones.
All right, you've been listening to the Dollars and Cents Radio Show with Troy and Lori. Got another about 40 minutes here or so, maybe 35. On the other side of the break, we were talking about all the stuff that we have to get through in the next 35 minutes before we get to 3 steps to investment success, which I think we've been trying to get to for the past 3 weeks. I don't know, I could be wrong, but I think we've been trying to get there for 3 weeks or so. Troy will be getting to that in a moment, but again, you can always call us Monday through Friday, get more information about us. You can get more information at www.my401kstore.com. You can get more information about the Social Security stuff we were talking about on our landing page, which is denverssi.com. You can also call Monday, well, you can call 24/7, 365 days a year, 303-539-5420. All right, Troy, how about those 3 steps to investment success?
Okay, let's start there, and then we're going to turn the page and answer the question, is your broker making you broker? Okay, you're listening to the Dollars and Cents Radio Show. 3 steps to investment success. First and foremost, evaluate your risk profile. What's interesting is I talk to many families, and I ask them, I start with a very simple question on a scale of 1 to 5. 1 being very conservative, I cannot sleep at night if I lose a single dollar. 5 is I'm a risk taker, I'm willing to lose it all if I have the potential to double my money. Where do you fall on that scale of 1 to 5? And many times, too often, they'll say, well, we're about at 2. We used to be maybe about a 3, 3.5 or 4, and then, we went through 2008. So we're about a 2 at our age, and their investment portfolio does not resemble anything close to a 2. And so that doesn't fit. So first of the 3 steps for investment success is evaluate your risk profile. In other words, take an accurate and honest look at your time horizon. I said in the very beginning of this show, time horizon is critical in the planning process. When you're evaluating things and your risk profile, what is your time horizon? If you're 10 years away from retirement versus 36 months, completely different risk profile. If you are 36 months or less away from retirement, folks, the rubber has done hit the road. So first, properly evaluate your risk profile. Second, build wealth with a consistent investment approach. A properly allocated portfolio that meets your investment objectives is what's going to help you achieve your long-term financial goals. And especially now, we've got a lot of things that for the do-it-yourself investor and for those folks that aren't using either a financial professional at all, there are a lot of folks that aren't using a financial professional. And some of them may be even doing better than the ones that are using the wrong financial professional. But especially now, there are a lot of things that if you're not plugged into the right financial professional, that are acting as financial headwinds against you, against your retirement, against your portfolio, against your 401ks. These are financial headwinds that if not properly allocated within your portfolio, these headwinds are going to be much stronger than they need to be. And so having that properly allocated portfolio with the right balance of risk, red money, green money, the proper balance of stocks and fixed income portions in there, very, very important. So that's the second. Build wealth with a consistent investment approach. And lastly, utilize professional investment managers. At the end of the day, with something as important as your retirement for you and your spouse, you certainly wouldn't perform surgery on yourself. So why would you considering manage a portfolio if that's not your area of expertise? This is too important because, as I've said too many times, Lori, you have too. You don't get a do-over with this. you don't get a do-over. This is your money. It is your obligation to make the right decisions when it comes to your portfolio, your asset allocation, the advisor that you choose to use or the advisor you choose to walk away from. At the end of the day, it's your responsibility to make that. So the third step to investment success is utilizing the right investment professional when it comes to your portfolio. Again, if that's your area of expertise, fantastic. Those of you that like to do that, enjoy it, you're good at it, I'm not speaking to you. I'm talking to those of you that you don't enjoy it, number one. It's not your area of expertise. Maybe it's overwhelming, and it can be intimidating. Coming in and saying, you know what, gosh, I'm 60 and this is my portfolio. I really don't understand it. I don't understand what this huge buffet of mutual funds means. I don't know what I'm really paying. Don't be embarrassed about that. Be proactive on that.
Well, and you know what, too, I liken it to, there's a couple different reasons. First of all, if you have been managing your own portfolio for a long time and now you're just tired of it, hey, we see that a lot. That,
Yeah.
you know, if you're heading towards retirement, you say, I really enjoy this, but now I hate watching the market every day.
Because you have to, if you manage your own portfolio,
Yeah.
you have to watch it every day. There's too much going on out there.
Right. So, I mean, you can certainly take a back seat, stay in the car, but take a back seat to it and have somebody, or Troy or somebody, take a look at it and get in there and start driving. There's no harm in that. So 303-539-5420. Also to the people who are intimidated or what have you. I say this a lot. You know, Troy back a couple of years ago had a bout with melanoma, had to be dug out of him and stuff. And I think I fired on his behalf at least 4 doctors because I didn't like him. And you know, when it comes to your health, it should be the same as your wealth. But I said, no, didn't like his bedside manner, or he talked over me. I didn't know what he was saying. He wasn't talking to me, yes, because I was in every appointment. But I took it very seriously, and there was we must have gone through 4 doctors before we finally came to the doctor that I and you felt comfortable. So there's no shame in saying, okay, this one, I can't understand him. I don't know what she's saying. There's just no shame in firing your financial professional or your doctor.
And that doesn't have to be a negative,
It's not
you're
negative.
fired type
No,
thing.
no.
You know, Donald Trump on The Apprentice, you're fired. It doesn't have to be like that. But listen, at the end of the day, I liken it to this. If you've been working with the same financial professional for 5 years or 10 years, some of you, I'm talking to you out there, 20, 25 years, for crying out loud. The dress rehearsal is over. It's over. Do you hear from them and I'm going to be talking about how do you pick the right broker or how to prevent your broker from making you broker. I'm going to talk about that here in just a second. But at the end of the day, you can look down and say, you know, gosh, I really don't understand what even I'm paying. I've been with this firm, this individual, he or she, for the last 10 or 12 or 15 years. I don't understand my fee structure. I don't know what I should be expecting from him or her or them. The dress rehearsal is over.
Well, and it's not even about the money necessarily. How many people have we talked to that they have no idea what they have or what organization their portfolio is or what money is set aside for what? If it's a rainy day fund, where do I take if I have an accident? Where do I have if I, have a medical issue? Where do I take if I need income? Where do I take if I just want some fun money? There's no plan in it. They don't understand what they have, where they go, where they take, so they just don't take anything. They just don't do anything. There's no plan.
Too many individuals are in the dark. In other words, I say this to each individual and family that I meet, is that when we are through this process, here's, if we are successful together, here's what's going to happen. Here's what underscores success. You will be able to explain what you have to somebody else. That's when you're working with the right professional. When you can say, well, regardless of what happens in the market, these dollars over here are my supplemental income dollars. They will not be lost due to a downturn in the market, and these are the dollars that are going to make sure that I'm in the income that I need. These are the dollars that, should I decide to take that riverboat cruise that I've been wanting to take with my friends, this is where I take that money from. This is the money that's in the market. It's going to go up, it's going to go down. This is the money that, et cetera, et cetera, et cetera. They understand their portfolio, the purpose for it. My question to you is, and I guess this is a good lead in, is are you getting your money's worth from your broker, from your advisor, from your planner? Too many individuals don't understand what they're paying. And it's not a question of whether or not you're paying too much. It's not that, because listen, at the end of the day, you're going to get what you pay for, like anything else. You're not going to get the best on the planet for free. Okay, it's just not going to happen. What you're going to get is going to resemble what you're paying for. Unfortunately, most folks who have an advisor, they don't know what they're paying, and trust me, you are paying them. They are not a non-profit organization. So that's first and foremost. They need to be upfront and let you know what they're paying. So here's what you should be expecting from your advisor. This is a quick bullet point before we go to the break. Number one, communication. Let me ask you this. When the market goes down, oh wait, let's just take a look at January, the first trading month of this year. The first 2 weeks, the worst start of a year ever in our markets. Monday down, Tuesday down, Wednesday down, Thursday down, etc. Worst month the NASDAQ's had since 2010. When the market goes down every single day for more than 2 weeks, are you getting contact with information regarding the markets, the economy, and most importantly your portfolio? Or does it look more like this? I'm hoping, but I'm worried. I'm praying, but I'm worried. Lose sleep, worry. Now I'm angry, worry. Listen, that's not what you're paying for. Those aren't the emotions that you're paying to get. You're paying for something that should give you confidence, that should give you peace of mind, because you understand that your portfolio, listen, my plan that I have takes into consideration we're going to have these volatile times. These headwinds are soon going to become tailwinds in my portfolio, and so I completely understand. These dollars over here aren't even moving up and down in the market. They're not going down because I have the right balance of green money and red money. So communication is first and foremost. Second, do you have a plan that plans for these rocky, bumpy, volatile times? Most folks hope they do, but they're not really sure if they actually do. A plan, and I say that not just as a fancy financial term, but a plan. I say this as a plan can be both a verb or a noun. And when we are planning, that is a process. That's a verb. That's you are actively planning something. But to have a plan means you've already went through that process, and you actually have something that resembles the retirement that you envision in your mind. Now you own that. It's something that was created through that blueprint. So do you have a plan? And it starts with doing some planning. And so it's very, very important. The most important component, having that plan in place and understanding it, being able to describe it to somebody else. Third, just like a big ship, here's my question to you. Is there anybody at the helm? Is there anyone paying attention in the engine room? Trust me, folks, if nobody's manning that ship, your financial ship, it's but a matter of time before your boat hits that financial iceberg, and it will. And there's a lot of them out there right now. There's some things that are strong financial headwinds that really a professional needs to have you properly positioned to avoid. Global factors that we have no control over if we're not paying attention. What's going on in China, a slowing economy, a strengthening dollar, lower corporate profits, the price of oil, commodities industry in general, bond rates that are going to be between 1 and 3 in 2016 we're projecting. So there's a lot of things that if you're properly positioned, you should be sleeping well. It's not going to affect your income. It's not going to affect your 30-year wonderful retirement, your new venture, that boat, that vacation, those types of things. And lastly, if your advisor is upfront about what you pay, then more than likely they've been upfront about what you're going to get in return. And those two things are important. That's what we call full disclosure. Here's what you're paying, but here's what you're going to get in return. You're not going to have to sit there and curse me because the markets are going down because you don't know if somebody's paying attention. You want explanation as to here's what's causing this. We don't believe that it's going to be long, drawn out, sustained. We don't believe that we're heading for another recession. We believe this. You deserve the experts reporting to you. That's what you're paying for. Now, If that doesn't sound like your situation, the reason I'm talking about this is we've been serving your friends, neighbors, relatives, coworkers for a decade and a half. Maybe it's time to come in for a complimentary second opinion, a complimentary overview, portfolio analysis review. We don't charge for that, but I guarantee it, at worst, at the least, you will walk out knowing more about what you have than you knew when you came in. And that's a good thing for you. So if you're listening right now and you think, you know what, it's the beginning of a new year and things are very volatile and I would like some assistance or some guidance or maybe some guidance on which way to go, give us a call. Kathy's standing by right now. Schedule your complimentary consultation. Doesn't cost you anything, but you're going to sleep easier, and like anything else that you know that you've been putting off, it's going to be like a weight lifted off you.
All right, that number to call, 303-539-5420, and 303-539-5420. Hey, Troy, I am just going to shout out in there, too. Sounds good what you're saying, and I get it. I do get it. But we also have to say, I'm going to make a note to all of our listeners that you got to be accountable, too. I mean, you know, your expectations should be high. But whether you're meeting with us or your current advisor or just getting a second opinion from somebody else, your expectations and goals have to be made clear too. I mean, everybody is,
absolutely.
You know, and I know, Troy, you are fantastic. I think you go overboard in some of our managed accounts with people, especially this past 4 weeks in the market and stuff. And I get that, but it's not to say that it's like your doctor doesn't call you every month to just check up on you and how are you doing and stuff like that. So I just think maybe you want that call. We have been told by one of our clients, Troy, you're getting in touch with him too much. Like he trusts that you're looking at it, but you know, there's that too. I think you do a great job of over communicating, but I'm just saying for the client too, or for the person out there.
Listen, most folks will just say, listen, if I can get that email saying, hey, here's what's going on, and the door's open if you'd like to call and discuss it further, that's, you know, at least they're getting the picture that somebody's paying attention. Somebody's in the engine room.
Absolutely. So give us a call, 303-539-5420. Again, that number's 303-539-5420. I have to wander off for the rest of the show, but very exciting. Logan's debut on the radio is coming up right now.
We're going to be talking about how much money the world's top billionaires lost in 2015. Yes.
I have to leave during the fun stuff. All right, you're listening to the Dollars and Cents Radio Show. Stay tuned. They will be right back right after this commercial break.
All right.
Visit quicklane.com.
Let's see. Listen to your favorite songs from the 50s and 60s or work on your finances. Hi, this is Lauri with Hamsher Wealth Management. And let's face it, working on your finances can be stressful or just flat out boring. Instead of wasting your Sunday worrying about your financial future, let us do the work for you. At Hamsher Wealth Management, we'll give you the peace of mind that you won't outlive your money. Whether you're in retirement or simply planning for it, now is the time. Give us a call at 303-539-5420. That's 303-539-5420. We work Sundays so you don't have to.
And welcome back. You're listening to the Dollars and Cents Radio Show. Thanks for staying with us this beautiful Sunday morning. You can catch us each and every Sunday from 8:30 to 10 live right here on AM 1430. Lauri has left me high and dry in the studio. Go figure that. I'm sure she's tuned in on her car radio though. And we have a very, very smart replacement here. We've got our oldest, Logan, who has been interning here at the Dollars and Cents Radio Show, running the video equipment and doing some audio stuff for us. And he does a lot of the financial research. So he's now he went from behind the scenes to in front of the microphone. So Logan, welcome to the Dollars and Cents Radio Show.
Yeah, thank you. It's good to be up here. Usually I'm back behind the camera, so.
Well, now the camera's on you. And he's the sharpest dressed one in the studio. Okay, let me just start, if you didn't catch the very beginning of the show, a quick weekly market update. Market volatility continues. This past week, averages posted, this past month, averages posted their worst January in 7 years. Stocks averaged more than a 1% swing each day last week. Volatility really is, it's here. The S&P 500 finished the week higher. The main drivers, earnings reports, and the persistent focus on oil. Only about a third of the companies have reported earnings so far. Good news is the majority of results have come in ahead of expectations. Ending for the week, the Dow closed at 16,466, up 2.3% for the week, still down 5.5% year to date. The S&P closed the week at 1940, closed the month at 1940, up 1.7% for the week, down still 5.1% for the year. Oil up 4.5% for the week to close at 33.64 a barrel, still down 9.2% for the year. You know, it's amazing. We go back 30 years, the price of oil and the direction of oil and the volatility of oil was negatively correlated to the overall market. And right now it is highly correlated, which means that we're seeing the markets mirror what oil is doing right now. And there's a lot of reasons for that. But we see oil up for the week, the major indices up for the week. Oil's down for the week, oil's down for the day. Markets follow suit. Higher volatility in the price of oil, higher volatility in the overall market. So we think that once the price of oil bottoms out, we believe that we're in the later stretches, the later innings of that. We'll start to see some more stability in the overall market. So, Logan, we've got some interesting stuff to talk about here today. We've got some pretty cool. And I want to get your thoughts on some of this stuff because it's always good to get the thoughts of the youth in here. Logan, you've got the article here as well. This is a recent article from Bloomberg Business. The world's 400 wealthiest individuals lost $19 billion with a B collectively in 2015, according to the Bloomberg Billionaires Index. Falling commodities prices, signs of a slower growing China spooked investors around the world, leading to the first annual decline for the Daily Wealth Index since its 2012 debut. So we're going to talk about some of these billionaires in this article, Logan, but what was your takeaway? What kind of caught your eye in this particular article?
Well, one of the first things I noticed when reading this article is that the world's 400 richest people in the world control $3.9 trillion, and that's still $15 trillion less than our national debt.
You know, the reason Logan brings this up, and that's a good comparison, and that's not in this article. Well, how much they control is, but you did some research on the country's national debt here within the last few weeks, and you know, your response was really telling. You did some research, and our national debt is around between 18 and 19.
Yeah, it's actually
trillion.
It's probably at close to 19 trillion right now.
Okay, so close to 19 trillion right now. And servicing the debt could become a real problem in this country. And when I asked you what you thought after doing the research on the national debt and servicing that debt and paying the debt, Logan's response was, we're screwed. And so it really is a bigger issue than I think most Americans think. But so the 400 wealthiest individuals have a net worth of what?
$3.9 trillion.
3.9 trillion. Okay, so let's look at some of the folks on this list. Let's start with the biggest loser and the biggest winner, because there was a huge disparity between the biggest winner and the biggest loser. The biggest loser was the world's richest person back in 2013, which was the Mexican telecommunications mogul Carlos Slim. I just like that name. He sounds like the richest dude in Mexico, doesn't he? Carlos Slim. He fell from number 1 in 2013 to number 5 this year after losing 20 billion. 20 billion. Then we've got our United States billionaire staples, Warren Buffett and Bill Gates. Warren Buffett, the world's third richest person, lost 11.3 billion as Berkshire Hathaway had its first negative annual return since 2011. Microsoft co-founder Bill Gates, the world's richest person since May of 2013, fell by $3 billion in 2015. Logan, who was the big gainer in 2015?
One of the big gainers was Amancio Ortega. He's in the top 10. I know he's not the man you're looking for, but he struck me as odd because he was in the top 10 richest people, and he actually went up in profit, and that struck me as odd because he works in the fashion industry, and I didn't think that the fashion industry would rise out of all those.
Really? What specifically? Is he tied to a specific company? What is he?
It says he works for Inditex. Yeah,
I'm not familiar with it. Wow. He's from Spain.
Yeah.
Wow. You know, it's amazing. We throw these numbers out there like it's not a big deal, but it is a big deal. But let's just put this in context. And here's why we're talking about this. First of all, it's kind of cool to listen to all these big numbers, and the big gainer is just going to blow your mind. I mean, this is huge, the big gainer in 2015. But how they got there is interesting. But when you look at Warren Buffett lost $11 billion with a B. That's like finding a quarter in his pocket. I mean, literally, what effect do you think that had on Mr. Buffett losing $11 billion? Nothing. It had no effect. My point is these are professional investors, a lot of them. And when you are at 10 billion, 20 billion, 70 billion with a B dollars, and you lose 3 billion or 10 billion, it's not going to change your standard of life. But for Main Street America, for you and I, if we lose 20% or 30%, those percentages could be game changers. Game changers. So those of you that are listening that have the billions of dollars in the bank, probably not to worry. You're probably going to be just fine. But for those of you that are Main Street Americans, that your 401ks and IRAs may need to come off the bench and play supplemental income role, well, maybe we need to pay a little bit closer attention. So the big gainer, and this kind of spills over to what happened in the S&P 500 in 2015 as well, which was, I think, a pretty big surprise, and I think a lot of you listening are going to be shocked here. But the top gainer in 2015 was Amazon founder Jeff Bezos. Born in New Mexico, he more than doubled his net worth in 2015 to $59 billion in 1 year. He added $31 billion in 1 year. That is amazing. I mean, that's just, it's staggering in 1 year. So when collectively the Forbes 400 lost a collective 19 billion, that's including the guy that made 31 billion in 1 year. 2015 was an interesting year. It turned out flat. We had predicted it a year, right here on our show a year ago, that it was going to end the year flat, maybe up or down within 2% of where it started, and it did. But the ride was very, very bumpy and rocky from start to finish. And in the S&P 500, Logan, you and I were talking about this just yesterday. The S&P 500 finished the year flat. However, the top 4 players in the S&P, which was Amazon, I believe Netflix, Facebook, and what was the other one? Facebook, Amazon, Netflix, there was one other, Google, Alphabet, I think, were the top 4. Had huge years. And in the S&P, if you take the next 6 behind them, the top 10 in the S&P 500 in 2015 had an equity increase of something like 68%, okay? Carrying the other 490 companies in the S&P 500 that if you take out the top 10, the remaining 490 companies did about minus 4 to 6% for the year. So that, yeah, the top 10 companies really ended the year with carrying a lot of weight on their backs.
Yeah, and all those top 4 companies were technology companies. And another statistic going along with that is the 44 technology billionaires added $81 billion to the total net worth that year.
Just the technology
Just
billionaires.
the technology.
Well, what's interesting about those stocks, Logan, and then we look at Facebook, that's a technology. Amazon is the online. We look at those, and those are companies that their stock prices are very high. They don't pay out dividends. They reinvest the profits in their company. They're still continuing to grow, and so you think, well, boy, that sounds like a great story. Look at Amazon here. I mean, the founder of Amazon increased his net worth to $59 billion, increased it by $31 billion. Maybe I should be investing in Amazon. Very volatile. These are also very volatile. And you asked about that yesterday, Logan, and my answer was just that. There are some good opportunities out there. But they can also, you can get in at the wrong time as well. By the time you read this article, and Amazon did what it did last year, I mean, it exploded. And I think for a while it became, and maybe it still is, was the largest company in the world, surpassing Walmart, I believe, for a bit. You think, well, boy, maybe I need to put my money there. You better hedge as well. Having a good diversification of not just stocks, but sectors within your stocks is very important. Maybe some blue chip dividend paying stocks also is important. There's a story in there, Logan, did you read that in there about the Walmart?
Yeah, I did.
Refresh my memory on that. Trying to find that. There was, the Walmart family is just, they're all over that Forbes 400.
So America's second richest woman, after recently unsealed court documents revealed that her late husband, John T. Walton, founder of Walmart, gave a third of his Walmart shares to their son, Lucas. So he's 29 right now, and he is the 92nd richest person in the world with $11 billion.
Yep. Yeah, amazing. 29 years old. Dad left him $11 billion, and he's 29. So I believe that the founder of Walmart, Sam Walton, was either his grandpa or I think probably his great-grandpa, this 29-year-old. And so he's number 92 in the world. Amazing. It's amazing when you look through these lists, how many, if you go online and you actually look at the list, it tells the person, their age, and the source of their money. So for example, Jeff Bezos would be founder of Amazon, Warren Buffett would be investments, but you'd be surprised how many folks on the Forbes 400, it just says inheritance. And at the end of the day, Logan, that's not going to be you. And I know it's not going to be me, but hey, folks, if some of you listening out there are going to be blessed enough to be in that, to where your fortune will be made in inheritance, good for you. Hey, you're listening to Dollars and Cents Radio Show. Make sure you catch us each and every Sunday from 8:30 to 10 a.m. live right here on AM 1430. We're going to bring you the weekly market recap each and every week. And anything that you need, financial power tools, A to Z, pick up the phone and give us a call, 303-539-5420. In the meantime, have a great Sunday. Have a great week. We'll see you next week on Super Bowl Sunday from 8:30 to 10 a.m. Over and out from the Dollars and Cents Radio Show. We do. Okay, so let's get our crap together.
Troy Hamsher offers investment advisory
There's your
services.
disclosure.
Perfect.
LLC, located in Arden Hills, Minnesota.
Yeah, I like this little prop up.
Registered investment advisor. Radiant Advisors.
That'll always be, at least that one will always be in here for you.
Good. Here, you want to? Where does it go?
KEZW and KQNG.
Let's not let. Oh, it does. Let's not let that sucker walk away.
1430. Good times.
Yeah, I won't hear the end of
Great
that.
oldies.
Good morning and welcome to Positive Changes with Lee Wren. I am a certified clinical master hypnotherapist and master NLP practitioner
No, I noticed that.
with over 43 years
ran out.
in the human potential field. And it is my intention to give you tools and techniques that can help you right